Federal Reserve new chairman Kevin Walsh had his first FOMC meeting today. The FOMC meeting, as a part of forward guidance, they mentioned that the Fed fund rate at the end of the year is going to be 3.8%, and for the next year it's going to be 3.6%. Earlier, the estimate for the end of the year was 3.4%. So instead of that, today's forward guidance has gone up to 3.8%. Earlier, market was expecting that there's going to be one rate cut before the end of the year, but instead of today's this forward guidance, the market is assuming that there's going to be an interest rate hike in the month of October by another 25 basis points. So instead of interest rate cut, there's going to be an interest rate hike this year, and that is why the market got very disappointed and sold off immediately. Both the 10-year treasury yield gone up, and all the other financial market, Dow, S&P 500 and NASDAQ, they all sold off significantly. He spoke a lot about the Federal Reserve's fighting the pricing stability, as well as other mandate of keeping maximum employment. Generally, he spoke about the economy is doing well. He talked about GDP, unemployment, and also spoke a little bit about a summary of economic projections and forward guidance. Although he himself did not speak much about, he did not say anything about personally commented on forward guidance. Here is the commentary from Kevin Walsh.
For a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. Good day. It's an honor, a true honor, to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members for a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next.
Kevin Walsh also mentioned that Fed is going to be creating a task force, 5 different task force, focusing mostly on different areas. Those areas are, number one is Fed's communications. The second one is going to be the balance sheet. The third one is going to be the reliance of data sources. They wanted to have good data sources. And other areas he wants to have a task force around the productivity and jobs. And the last task force that he's going to be, he mentioned about a central bank's inflation framework. So those different 5 task force that they're going to be creating. After he completed his speech, the 10-year Treasury yield spiked up to 4.489%, about 6 basis points higher, and all the other markets, Dow fell about 500 points, S&P 500 fell 91 points, and Nasdaq fell 354 or 1.35%. Current Fed fund rate is from 3.5% to 3.75%. And if I track in the CME Fed Track tool, it says that by July, the Fed fund rate is going to be going higher. It's going to be around 65%. And in the month of October, it's going to be almost like 75%. The accumulative more than I'll say starting from the Fed fund rates 3.75 to 4 all the way to like another 50 basis points higher than that. And in December it's going to be almost 87% that the rates are going to be going up by another minimum 25 basis points from where it is currently. So with this data, the market is adjusting certain types of assets, the stocks, long dated assets, they're going to be selling off, and the value stocks are going to be doing better in this kind of high interest rate environment. In terms of as of today, if the Fed fund return is not changing much, so all the credit card interest rates and everything is going to remain pretty much same. But the other interest rate around 30-year mortgages or car loan rates, they are going to be impacted if this 10-year, which are based on 10-year Treasury yield, which has gone up today. So if this 10-year treasury doesn't come down, other interest rates around mortgages or car loans could go higher. So some reporters asked him if Kevin Walsh has been speaking to Trump, and he did not comment anything. And in various things, basically, like, he had supported the policy. Currently, Trump is like, putting in place, saying that, American economy is going to be doing really, really well, and America is going to be coming back as a very strong country as a part of the policy President Trump has been putting in place. Stay tuned. What really happens in upcoming FOMC meeting, I'll keep it posted. And also, if you like this video, please hit a like button, and also subscribe my channel so that I get encouragement to create more videos like this. Thank you very much, and have a wonderful day. Bye bye.